we also basically talked who are the main players in Forex market. Now we need to know what determines exchange rate, okay? What are the major determinants, and what are those things which tells us that euro dollar, for example, is 1.1200 now. So economic policy is the first important thing, okay? The economic policy is actions that governments take in the microeconomic field, okay? So it's subject to every government. So it covers the systems for setting levels of taxation, government budgets, money supply, and interest rates, but also labor market, national ownership, and many other areas of government interventions in the economy, okay? That is economic policy. Government budget deficits or surpluses, basically it's important because government budget is a government document presenting the government's proposed revenues, spending for financial year, okay? When we say government deficit, we use national debt. That is now the case with Greece, okay? Federal government deficit is equal to national debt. So it's the same thing. And Greece is currently undergoing a federal government deficit. Now, the opposite of a budget deficit is a budget surplus. And that means when inflows equal outflows, we said the budget is balanced, okay? So we have budget deficit, budget surplus, and equilibrium. Equilibrium is when inflows equal outflows, okay? Other important factor is balance of trade levels and trends, so-called supply and demand of currency. So just like any commodity, the value of a free-floating currency is based on supply and demand, okay? Now, to increase a currency value, central bank can buy currency and hold it in its reserves, okay? That will reduce the supply of the currency available and could lead to an increase in valuation, okay? To decrease currency value, the central bank can sell its reserves back to the market, okay? To decrease currency value. And usually that was happening with yen, okay? Because too strong currency is not good for exporters, okay? Because importers needs to pay more for exporter goods, okay? Then, to decrease the currency, central bank will sell its reserves back to the market. Selling, you know what selling is. Basically, you're devaluating your currency, and that will increase the supply of the currency and could lead to a decrease in valuation, okay? So that is supply and demand, okay? Then we have inflation levels and trends. You know what basic definition of inflation is. Inflation is the increase in prices of services and goods over time, okay? So the rate at which the general level of prices for goods and services is rising will make purchasing power falling. So if the inflation rate is 3%, then a $10 good or service will cost $13 a year. Then we have economic growth, and basically the main measurement of the economic growth is GDP, gross domestic product. GDP is an economic model that reflects the value of a country's output. country's GDP is the total monetary value of the goods and or services which is produced by the country over a specific period of time. So GDP. Now guys, this is important, guys, okay? So this is important. Okay, this is a typo, yeah, so it's basically 1003, but no problem. Boyk is saying 30, yeah, this is a typo, so actually it's 1003, but you understand the point, okay? You understand the point, okay? The thing is that these factors, guys, all of this which I have been talking now is reflected on economic calendar. And we will get back to economic calendar. So you need to be patient and you need to understand all of these concepts. Because at the second part of the webinar, I will be presenting you the system for economic trading, spike trading, and NFP trading, okay? But let's concentrate now on these economic facts, okay? Okay, this is a typo and we can correct it basically, okay? Now, the important thing to say also, I forgot about it, is basically market psychology. The overall sentiment or feeling what market is experiencing at any given time. That is greed, that is fear, that is various expectations, and all of those factors will contribute to the herd, okay? And that will translate to investing mentality or so-called sentiment, guys. So-called sentiment. Now, the essence, guys, of monetary policy, okay? The essence of monetary policy is this. You can memorize, snapshot this slide because this is important, okay? When there is a recession in the economy, central bank will decrease the interest rates, okay? I know that many of you just read through all of these statements about interest rates, but you don't understand what they're used for, okay? So when there is a recession in the economy, when the things are not going fine with the economy, okay, is basically is when central banks are decreasing the interest rates. And in the meantime, they are pumping the economy with money in order to stimulate business activity and prevent the development of deflation process, okay? Now, in contrary, okay, when the economy is on the rise, there is an overheating risk of, or the risk of serious inflation growth, okay? And central bank starts to increase interest rates because their job is to halt the business activity and the rise in inflation, okay?